about. So, what are the content that was discussed in last class? So, we discussed about definition of company as well as features of company. So, first one definition, second one features. So, what is the definition of company as per Companies Act? Company is a company which is incorporated under this act or previous company laws. Okay, then what are the features of company? Company is a separate person. It is having separate legal entity status. Company is an artificial person. Company can use common seal but not mandatory. It is optional. Next one. Company will have perpetual succession and the members in the company will have limited liability in general cases, not in all cases, only in general cases. Okay, let's see one by one. First one, what is meant by separate legal entity? Company is different from members. Company is different from board of directors. Company is different from promoters. In simple words, company is a separate person. What happens if there is any asset on the name of the company? It belongs to company only, not to promoters, not to shareholders, not to directors. What happens if there is any debt on the name of the company? Only company is liable to pay that debt, but not promoters or members or directors. But this concept is applicable only when company is in existence. What happens when company is dissolved? Then the liabilities of company will be settled by using assets of the company. If there is any extra asset, who will take that asset? Members. If there is any extra liability, who need to pay for that liability? Members. At that particular point of time, how much amount they need to contribute? It depends upon the type of the company in which they are members. Say for example, if they are members in limited company, their liability is limited. If they are members in unlimited company, their liability is unlimited. But in most of the cases, in general cases, members liability is limited because most of the companies are limited companies only, but not unlimited companies. Is it possible to create unlimited company? Yes, but majority people will choose to create limited company but not unlimited company. Next one. Central government, RD and ROC. So who are these people? Central government, regional director, registrar of companies. Okay. Then what is their role with respect to Companies Act? First of all, Companies Act, is it a state act or central act? State act means that act is applicable only to particular state. Central act means that act is applicable to entire nation. Okay, then what about the applicability of Companies Act? Is it applicable to only a particular state or entire country? Entire country. That means it is central act. Then who is having power to amend this Companies Act? Because it is central act, the power is in the hands of central government. So they will implement the Companies Act 2013 in the entire nation. Okay. Is it possible for central government to see each and every matter? No. That's why central government shifts its power to MCA, not ROC, it is MCA, which stands for Ministry of Corporate Affairs. So ministry is nothing but a part of government only. So here Ministry of Corporate Affairs is a part of central government. So Ministry of Corporate Affairs, Ministry of Home Affairs, Ministry of External Affairs. So like that there will be some ministries. All these ministries will be governed by government only. So on behalf of government, who will regulate Companies Act? MCA, that is Ministry of Corporate Affairs. Now under MCA there are two level officers. One is regional director, second one is ROC. Okay, what is the role of regional director and what is the role of ROC? So for example, if we want to create a company, we need to send certain documents. Okay, to whom we need to send those documents? Is it RD or ROC? ROC. That means the person who want to create a company need to forward the documents to ROC. And who will grant registration? ROC will grant registration. Okay, after registering company, so is there any situation where we will communicate with ROC? After registration, at the time of registration, definitely we need to consult ROC. But now after registration, is there any necessity to consult ROC, to communicate with ROC? Yes. If there is any changes in future, then we need to intimate the change to ROC. Not only changes, every year we need to prepare financial statements and annual returns, and we need to forward these financial statements and annual return to ROC, whether our company is doing business or not. We need to forward these two things to ROC. That means who will be in regular touch with the companies? ROC. Okay, he's basic level officer. Now, how many ROCs will be there for each state? How many ROC will be there for each state? It is not one, it is at least one. There is a lots of difference between one and at least one. One means one only. At least one means it may be 1 or 2 or 3 or 10 also. Now say, how many ROCs will be there for each state? At least one. Okay, say for example, Andhra Pradesh. How many ROCs are there? Only one. Who is that only one? ROC of Vijayawada. Next one. What about Telangana? Only one. ROC of Hyderabad. Then what about Maharashtra? Two. Who are they? ROC of Mumbai and ROC of Pune. And what about Tamil Nadu? Tamil Nadu. One or two? One or two? Two. Same. ROC of Chennai. Next one. ROC of Coimbatore. And what about Karnataka? Only one, that is ROC of Bangalore. So like this, every state will have at least one ROC. If state is big, then the number of ROCs will increase. Okay, next one. Then what about RD? So now ROC is dealing with all companies from formation to dissolution. So he is directly dealing with the companies. So whenever company want to communicate anything, they will communicate with the ROC. But in order to regulate ROCs, there will be certain kind of people called as regional directors. In shortcut, they are called as RD. Then how many RDs are there? Only 7. Not for each state. It is for entire country. For entire country, only 7. And these 7 people will regulate ROCs of every state. And so whenever any necessity arises, company will communicate with whom? ROC. But in case of few important cases, company need to communicate with RD directly, not with ROC. Say for example, shifting of registered office from one state to another state. Whose approval is required? Is it ROC's approval or RD's approval? RD's approval is required. But what happens if the change is within the same state? Then it will be ROC. RD approval is not required. So some important matters require RD's approval. All general matters will be taken care by ROC only. Next one. What happens if there is any dispute between ROC and company? Say for example, ROC is imposing penalty on you, even though you are a genuine person. Now you want to go against with ROC's point. Is it possible to go against ROC's point? Yes, it is possible. Then how to go against to ROC's point? You need to go to court. You need to go to court. Okay, in India, codes are divided into two categories: general purpose codes, special purpose codes. So what is the difference between general purpose code and special purpose code? So in case of general purpose code, the court will deal with any matter. It will deal with any matter. But in case of special purpose court, it will deal with only particular matters, not with all matters. Okay, what we see in movies, web series or serials, so they are called as general purpose courts. So they will deal with each and every case. But there are some special courts in India which only deal with some special matters, not with all matters. Say for example, if you want to go for Companies Act or LLP Act related matters, then you can go directly to NCLT, which stands for National Company Law Tribunal. So it is a special court which was designed to take the cases from Companies Act as well as LLP Act. So it will not deal with any other civil cases. It will not deal with criminal cases. It will only deal with the law which is related to companies as well as LLP forms. So this kind of courts are called as special courts. Then for Companies Act, what is the special court? NCLT. Now NCLT passes an order against you, that is in support of ROC. Now you want to go against to NCLT order. Is it possible? Yes, it is possible. Then where to go? Now you need to go to NCLAT. NCLAT. NCLT stands for National Company Law Tribunal. Then what about NCLAT? National Company Law Appellate Tribunal. National Company Law Appellate Tribunal. Because the orders made by NCLT can be appealable to NCLAT. That's why this is called as appellate authority. And what is the name? National Company Law Appellate Tribunal. This is National Company Law Tribunal. This is Appellate Tribunal. So which is having higher authority here? NCLAT is having a higher authority. Okay, sir. Because of my bad fate, NCLAT is also supporting ROC only. Is there any choice for me to go against the order of NCLAT? Yes, it is possible. Then where to go? We can directly go to Supreme Court. Sir, because of my bad and worse situation and bad luck, Supreme Court is also against to me. Is it possible to challenge the decision which was made by Supreme Court? No, it is not possible. So Supreme Court is the final judgment making authority. So in entire company law, you may see the words that is NCLT, NCLAT, which stands for National Company Law Tribunal, National Company Law Appellate Tribunal, and ROC, Registrar of Companies, RD, Regional Director, CG, Central Government, MCA, Ministry of Corporate Affairs, which is a part of central government. Next one. Companies Act 2013. So who created Companies Act 2013? Who created Companies Act 2013? No need to think of the name. It is Parliament. So Parliament created Companies Act 2013. Okay, very good. Then can I say Parliament is having such kind of knowledge to frame each and every point here? No. Then who will frame the each and every point in Companies Act 2013? Who will frame? Central government will frame. Sir, but who need to make the law? Parliament. Why central government is involving to make the law? Because Parliament itself is delegating that authority to central government. So in Companies Act 2013, so wherever expert knowledge is required, so at that point Parliament members made prescribed word. Say for example, you need to forward this information through prescribed form. This company need to have prescribed number of members. This company need to have prescribed minimum paid up capital. Like this, wherever expert knowledge is required in Act, it was provided as prescribed. then who will prescribe the rules in that point? That authority was shifted to central government. And now central government shifted that authority to MCA, that is Ministry of Corporate Affairs. So now say, who will define what is prescribed? MCA will give. And whatever MCA is giving there will be called as rules. They are called as rules. Why they are not called as regulations? Because who is making law here? Government. If government is making law because of the power given by the parliament, then that law will be called as rules. If any authority is making law because of power given by parliament, then it will be called as regulations. Example, SEBI regulations. So SEBI is not a government. SEBI is an authority to monitor stock markets. Next one. Okay, now let's get on to main topics. So first one, types of companies. So I think you are already aware about all these questions, but so please listen these questions once again. So types of companies. First one, based on number of members. So based on number of members, how many types of companies are there? Based on number of members, how many companies are there? 3 companies. 3 companies. If company is having only one person as member, 1 person company. If company is having minimum 2 persons, private company. If company is having minimum 7 persons, public company. So total how many companies are there? 3 companies. 1 person company, private company, public company. But 1 person company will also come under private company only. But let's discuss about it separately. Even though it is a private company, we need to discuss about it separately. Okay, OPC is a private company, but special kind of private company, and normal private company, and finally public company. Now I want to know the definitions of OPC, private company and public company. Okay, first, what is the definition of OPC? So those who want to say, they can raise the hand. What is meant by OPC? OPC. Very simple definition. Very simple. Very good. So now, what is meant by OPC? OPC is a company which is having only one person as member. Very simple definition. Then what is public company? Okay, let's see first private company first. What is meant by private company? What is meant by private company? Those who want to answer, they can raise their hand. Okay. Okay. Third point. Okay. So next, definition of private company. Can you? What is the definition of private company? Minimum paid up share capital. Maximum 200 members. Prohibition to invitation to offer. So all kinds of invitation to offers are covered here, or only few cases? Few cases. What are those cases? Okay, sit down. Okay, is there any other one? Definition of private company. I think you listen this concept in CA Foundation. In case CA Inter and CMA Inter, now it is CMA Final. But still you people are struggling with the definition of private company. So what is the meaning of private company? What is the definition of private company? So don't look at the material. So just try to remember the provision. See, in exam there is no option called as referring material. Is there any exam like open book exam in CMA Final? No. In CA Final there is one subject like that, open book system. But in CMA Final, no. Then why you people are referring material now? Okay. Say what is the definition of private company? You only. Having minimum paid up share capital. Okay. 200 members undali. Next. Prohibit public subscription. What kind of subscription? Is it DTH subscription or Geo Fiber subscription or newspaper subscription? Is it monthly subscription or annual subscription? What kind of subscription? Securities. Shares or securities? Which one? Securities, not shares. Okay. Next one. Next point. So what is the definition of private company? Private company means it is a company having minimum paid up capital. So minimum paid up share capital as may be prescribed. Then who will prescribe what is minimum paid up capital here? MCA. Then how much amount MCA prescribes here? Nothing. That means you can start private company with zero paid up capital because nothing is prescribed by MCA. If MCA prescribes a minimum 1 lakh is required to create a private company, then what will be the minimum paid up capital? 1 lakh. Here MCA prescribes nothing. That's why with zero capital also you can start private company. So private company is a company having minimum paid up share capital as may be prescribed and by it articles of association. That means in its articles of association it need to have 3 clauses. Nothing but 3 points. First point is about restriction. Second point is about limitation. Third point is about prohibition. So first of all, say what is the meaning of restriction, limitation and prohibition. Restriction means generally you can't do that activity, but if you fulfill certain conditions you can do that activity. But in case of prohibition, whether you fulfill conditions or not, you can't do that activity at all. So if it is prohibited, there is no other option. You can't do that activity. But if it is restricted, you can do that activity, but you need to fulfill certain conditions. And what is meant by limitation? Nothing but limits. Maximum limit, minimum limit, like that. Okay. Restriction on what? Restriction on what? It is on transfer of shares or securities. Shares. Next one. Limitation on what? Maximum number of members, not members. Maximum number of members. Prohibition on what? Public issue of shares or securities. Securities. What is the difference between shares and securities? Shares and securities. What is the difference? Hmm. Okay. Very good. Share is one of the security. That's it. Securities include shares, debentures, bonds. So all are securities only. And shares are nothing but one of the security. It is nothing but one of the security. So here only shares is covered. Here securities are covered. Okay, let's see one by one. First one, restriction on transfer of shares. That means, is it possible to transfer the shares of private company to another person? Answer is yes, but there will be some restrictions. You need to fulfill certain conditions. Then only you are allowed to transfer the shares. Next one, limitation on maximum number of members. So what is the limitation on maximum number of members in case of private company? 200. So maximum 200. More than 200 not allowed. Sir, if at any time, what happens if number of members in private company exceeds 200? Then that private company need to rectify the same within the given time frame. Otherwise, what will happen? Otherwise, it will be treated as public company. Next one, prohibition. So prohibition on what? Public issue. That is public placement of securities. So what is the difference between public placement and private placement? That is public issue and private issue. So what is the difference between public issue and private issue? Hmm. So I think you are saying about general offer and specific offer. Okay. Next. So say this answer with respect to companies. Public issue, private issue. What is the difference between public issue and private issue? I'm not asking about private company and public company. I'm just asking about what is the meaning of private issue and public issue. Say for example, I'm a company. I want to issue my securities. I have two options. I can offer my securities to any person without seeing his background. Then it is called as public issue. If I want to issue securities only few people who are identified by the board of directors, not to all, only few people who are identified by the board of directors, then it is called as private issue. So offering securities to any person is called as public issue. Offering securities to identified persons is called as private issue. Then what about private company? What kind of issue it can make? So private company can go for private issue of securities. That means the board of directors of private company need to identify certain persons, and the company can issue securities only to such kind of people, not to anybody else. Because in case of private company, there is prohibition on issue of securities to public. So securities means it may be shares or bonds or debentures. So whatever it may be, private company is not allowed to issue those securities to public. It need to issue the securities to identified persons who are identified by board of directors. Then what about public company? How public company can issue its securities? Is it private issue or public issue? Is it private issue or public issue? Both. So a public company can go for private issue as well as public issue. It is the option left at public company. But in case of private company, there is only one option, private issue. In case of public company, two options. One is private issue, other one is public issue. Okay. So in case of public company, there is no restriction or no prohibition on private issue as well as public issue. But in case of private company, There is no restriction or prohibition on private issue, but there is prohibition on public issue of securities. Now finally say, what are the points that need to be included in the articles of association of private company? So whatever the content you include, no problem. But in order to call that company as a private company, 3 points must be present. So what are those 3 points? First one, restriction on transfer of shares. Next one, limitation on maximum number of members. And finally, prohibition on public issue of securities. Okay. Now I will ask a question. There is a company named as ABC Private Limited. And this company want to issue debentures. This company want to issue debentures. And it issued debentures to some identified persons. Okay. Now these debentures are listed in recognized stock exchange. Now my question is it possible to list the debentures of this private company in stock market? This is first question. Second question. So this company issued equity shares to certain identified persons. Why I am saying identified persons only? Because private company can only make private placement, not public placement. Okay. Now this company want to list equity shares in a listed recognized stock exchange. Say for example NSE and NSE. So is it possible or not? So once again I am repeating question. So what is the name of the private company? ABC Private Limited. What kind of securities it is having? 2 kinds, equity shares and debentures. Now it want to list its equity shares as well as debentures in National Stock Exchange, that is NSE. Now say, is it possible or not possible? Possible or not possible? Okay. Listing of equity shares, possible or not possible? Not possible. Why it is not possible? Because if you want to list any security in stock market, they must be freely transferable. That is without any restriction. There must not be any restriction on transfer of shares. But in case of private company, there is a restriction on transfer of shares. That's why this is not allowed. So this is not allowed to be listed in any recognized stock exchange. Then what about debentures? Debentures is allowed. Sir, why it is allowed, sir? Very simple. There is no restriction on transfer of debentures. In case of private company, yes, there will be restriction. But this restriction is only confined to shares, not to any other kind of securities. Here only shares word is covered, not securities word. If there is a securities word here, then definitely listing of debentures is also not possible. Listing of equity shares not possible. Listing of debentures is also not possible if there is securities word instead of shares. But what is the word given here? Shares. That means this restriction is only applicable to shares but not to debentures. That's why a private company can list its debentures in stock market. But it can't list equity shares in stock market because they are not freely transferable. Next one. Limitation. So by this limitation clause, we can understand the number of members in case of private company. So in case of private company, minimum should be 2, maximum 200. Then how to calculate this 2 to 200 limit? How to calculate this 2 to 200 limit? So here we need to follow 2 rules. Rule number 1 with respect to employees. Rule number 2 with respect to joint shareholders. So every company will issue some shares to employees. Why? Why company will issue shares to employees? In order to encourage them. So if they worked productively, then company's sales will increase or company's cost will decrease. Ultimately, company can see more profits. So to increase productivity of the company, so they need to compensate the employees. So how company will compensate the employees? by issuing them shares. Okay. So if you issue shares to employees, then they will become shareholder. But there is a maximum limit of 200 in case of private company. That means only 200 persons can employ in private company. Is it correct? No. In private company, there may be some extra members also. Say for example, Amazon India Private Limited. It's a private company. How many employees will be there in Amazon company? Definitely it is more than 200 only. Definitely more than 200. What happens if Amazon company allows shares to all those people? Definitely it will cross 200 limit. That means it need to be converted into public company. So is it correct? No. Here company is providing shares to employees just to encourage them. So not with an intention to raise the capital. It is just to encourage them. That's why lawmaker made a rule here. What that rule? While counting 2 to 200, ignore all employee shareholders. That means you need to ignore the shareholders who got the shares under employment, not because of cash. They need to get the shares under employment. Then we need to exclude those people. Okay, let's take an example. So there are 4 persons, Mr. A, Mr. B, Mr. C and Mr. D. Okay, now Mr. A bought the shares first and later he joined in the company. What is his position? For the purpose of counting 2 to 200 limit, can we consider Mr. A as a shareholder? Yes or no? Okay, next one. Mr. B. First he joined in the company. Later he bought the shares. Next one. He joined the company and he bought the shares. Later he left the company. Next one. He joined the company and later he left the company and thereafter he bought the shares of the company. Now say, so in these cases, which person will be considered as shareholder for the purpose of counting 2 to 200 limit? No doubt all are shareholders only. But for the purpose of counting 200, we need to exclude persons who got shares under employment. Now, let's check. Mr. A. Mr. A. So when he got the shares? Before employment, not during employment. That's why he will be included. He will be included. He will be included in 2 to 200 limit. Next one. What about Mr. B? When he bought the shares? After joining in the company. That means he bought the shares during employment. That's why we need to exclude from 200 limit. What about Mr. C? Exclude. Why exclude? Even though he is currently not working in the company. So whether he is currently working or not, it is not important. What is important? When he got the shares is very important. So when he got the shares, is it during employment or after employment or before employment? During only. So during only, that's why in this case we need to exclude. And last case, first he joined, thereafter he left, after he bought the shares. Included. Why? Because he bought the shares after employment. So in first case, before employment. In second case and third case, during employment. In last case, after employment. So what is the difference between second case and third case? So during employment only, and this person is continuing still now. During employment only, but this person left the company. Whatever it may be, whether he continues in the position or he left the company, it doesn't matter. What really matters here? How he got the shares, whether it is during employment or not. If it is during employment, then definitely we need to exclude this person while counting 2 to 200 limit. Okay. Now say what the definition of OPC? OPC. It is a company where there is only one person as a member. And what about private company? It is a company having minimum paid up share capital as may be prescribed. As of now, nothing is prescribed, so 0. Next one. And its articles, that is AOA, must contain 3 clauses. First one, restriction on transfer of shares, not other securities, only shares. Second point, limitation on maximum number of members, that is up to 200 only, except OPC. Sir, why except OPC? Because OPC is also a private company. But in case of OPC, there will be only one person, not 200. That's why we need to say except OPC. In remaining companies, maximum number of members are 200. Next, what is the third one? Prohibition. That is strictly not allowed. So prohibition on what? Public issue of securities. Here securities includes everything, that is shares, debentures, bonds. Last one. What is the definition of public company? Definition of public company. Very simple. Which is not a private company and having a minimum paid up share capital as may be prescribed. But here there is one more point. Any company which is subsidiary to a public company is also a public company. Say for example, there is a company called as ABC Private Limited. This is a private company. So in this company, 60% of shares are held by XYZ Limited, which is a public company, and 40% of shares are held by general public, not general public, are held by promoters who created the company. Now say, what is the status of this ABC Private Limited? It is not a private company. It will become a deemed public company. Sir, its articles contain those 3 clauses. Even then also, it will be treated as public company because it is a subsidiary to public company. So now say, what is the definition of public company? It is a company having minimum paid up share capital as may be prescribed, and it must not be a private company, and any company subsidiary to a public company is also a public company even though that subsidiary is a private company. Next one, OPC. So in case of OPC, how many persons are required? In case of OPC, how many persons are required? 2 persons. I am asking about how many persons are required, not how many members. It is how many persons. So how many persons are required? 2 persons are required. And one person will act like member and other person will act like nominee. So what is the role of member and what is the role of nominee? Very simple. Member is current member, nominee is future member. So if member expires, nominee will become member. If member become unsound mind, nominee become member. If member become insolvent, nominee will become member. So whatever happened to member will be beneficial to nominee. Why? Because now he will get the membership rights. Sir, we already discussed about a concept called as perpetual succession. So at that time we discussed about a point. So why there is no perpetual succession in case of partnership and why there is perpetual succession in case of company? In case of partnership firm, if anything is happened to partner, his place will get vacated. And what about his legal heir? What about his legal heir? Can he get that position by saying, I am the legal heir of this partner, so from now onwards, I will be the partner of this firm? Can he say like this? No. But in case of company, if any shareholder expires, now what will happen? His legal heir will become shareholder. But in case of OPC, it is not possible. In case of OPC, if anything is happened to this member, then not legal heir, nominee will become the member. Nominee will become the member. Sir, why sir? What is the reason? Very simple. The reason is minor. So minor cannot run an OPC. Minor cannot run an OPC. So in case of private company or public company, there may be more number of persons. So among all those members, having one minor is not a problem. But in case of OPC, there is only one person. What happens if that only one person becomes a minor? Can he run the company? No. That's why instead of relying on legalized concept, so company lawmaker made a new provision called as nominee concept. Now, whoever the nominee may be. So if member says this person name as nominee, then after this member, who will become member? Nominee will become member. So till then his status is nominee. When anything is happened to this member, his status will become member. Now he need to appoint one more person called as nominee. Nothing but Stepney type. So this member is appointing this person as a Stepney. And now what happens if this person become member? He need to appoint other person as his nominee. So it will continue like that. Next one. Then who are eligible to become member or nominee? So who are eligible to become member or nominee? Just now we discussed about a concept that is minor. So minor, allowed or not allowed? Not allowed. So he cannot become a member, he cannot become a nominee. Okay. Now next point. Is there any other restriction on getting membership or nominationship? Yes. What is the eligibility criteria? That person must be a natural person, not artificial person, only natural person. In case of normal company means normal private company or public company, who can become member? Natural person can become member, artificial person can also become member. Say for example, for all Reliance companies, what is the parent company? Reliance Industries Limited. It is the parent company. That means who invested in all these Reliance companies? An artificial person. Now in all these Reliance companies, so an artificial person is acting like member. That means in case of normal companies, both artificial persons, natural persons can act like members. But in case of OPC, only natural person is allowed to become either member or nominee. What about artificial person? No, artificial person cannot become either member or nominee in case of OPC. But in case of other company, no such restriction. In case of OPC, only natural persons are allowed, artificial persons are not allowed. Okay, next one. So they need to be Indian citizen. So OPC is an option which is only open to Indian citizen, not to foreign citizens. Then what about foreign citizens? How they can do business in India? So they can do business in India either as a private company or as a public company. Because for private company and public company, there is no such restriction. But if they want to create OPC, then the person who is acting like member or nominee should be an Indian citizen. I'm not talking about residential status. I'm just talking about citizenship. So both are two different concepts. So what is the difference between citizenship and residential status? Say for example, I am Indian citizen. Okay. So I may go to any other country to do any job. So at that particular point of time, I will become NRI, that is non-resident Indian, because I am not living in India. That's why I will be called as NRI, non-resident. Okay. Then what about my citizenship? Still, I will be called as Indian citizen. If I got any citizenship in any other country, then it is okay. But till then, I will be called as Indian citizen. So citizenship is different from residential status. So here, member or nominee must be Indian citizen, but not Indian resident. Then what about residential status? Whether he lives in India or not. That means whether he is resident or non-resident, he can become member or nominee. So even though he is non-resident, he can create OPC. He can act like member or he can act like nominee, provided he must be Indian citizen. So this is mandatory. Citizenship is mandatory. But what about residential status? It is not mandatory. Even a non-resident, that is NRI, non-resident Indian, can also operate OPC by acting like member or nominee. So this is not relevant. This is not relevant. Sir, how to know who is resident and who is not a resident? 120 days. In previous financial year, if that person stays in India for a period not less than 120 days, then he will be called as resident. Okay, what happens if he stays in India for less than 120 days? Non-resident. But it doesn't matter here. Why? Because both are allowed. Resident is allowed, non-resident is also allowed. As both are allowed, then determining who is resident, who is non-resident is completely irrelevant. So previously, only residents are allowed. Non-residents are not allowed. At that particular point of time, this concept is very important. Calculating number of days is very important. But now, central government provided relaxation and it allowed NRIs to create OPC in India. So because of that rule, now number of days, then who is resident, who is non-resident, these concepts are completely irrelevant, whether he is resident or non-resident. So it doesn't matter, only Indian citizenship matters. So if he is Indian citizen, then he can create an OPC in India. Next one. Next question. Now answer this question. ABC Private Limited. ABC Private Limited. So want to invest its money in OPC. Is it possible or not possible? That means ABC Private Limited want to become holding company and OPC as a subsidiary company. The two wholly owned holding company. What is meant by wholly owned holding company? 100% of capital is made by single person. That is ABC Private Limited in the given case. So is it possible to invest 100% amount in OPC? No. Okay. Then what about at least 50%? What about 1%? Why? So when it invests its money in OPC, then definitely it will become member of OPC. So who is eligible to act as member of OPC? Only natural persons. So being an artificial person, it cannot invest in OPC and it cannot become a member of OPC. So this is not possible. Okay. Then can OPC invest its money in ABC Private Limited? Can OPC invest its money in any other company? Is it possible? This is also not possible. Because OPC cannot make any investment activities. So it cannot invest its money in any body corporate. That means any company. So it can only do business, that's it. It can't make investments in other companies. So in simple words, holding subsidiary concept is not applicable in case of OPC. Because no one is eligible to invest in OPC and OPC is also not eligible to invest in any other body corporates. So a company cannot invest in OPC and OPC cannot invest in other companies. Okay, then what an OPC can do? What an OPC can do? Investment not allowed. Okay, fine. Then what an OPC can do? So can it be formed for charitable purpose? So can it be formed for charitable purpose? No. So it cannot be formed for charitable purpose. Sir, what is meant by companies having charitable purpose? Nothing but Section 8 companies. That means Section 8 companies are having only two status. One is private company, other one is public company. What about OPC status? No. If it want to do charitable business, it need to do business in private company mode or public company mode, but not as OPC. Because OPC is not allowed to do charitable activities. Next one. Second point. Okay. It cannot do non-banking financial services also. So what is meant by financial services? Lending loans, taking deposits. So this kind of transaction will be called as financial transaction. Okay, financial service. Then what is meant by banking financial service and what is meant by non-banking financial service? If that financial service is provided by bank, It will be called as banking financial service. If that financial service is provided by a non-banking financial service, say for example, Bajaj Finserv. So how many of you know about Bajaj Finserv? So what is the business that is being done by Bajaj Finserv? Giving loans. More importantly, consumer loans. So they will provide consumer loans. Consumer loans means, say for example, I want to purchase AC, but I don't have any money. Is it possible to purchase AC now? Yes, it is possible. Just go to the store and book the AC and pay through Bajaj Finserv. So they will pay money on behalf of you. And later you need to repay entire amount through Bajaj Finserv in no cost EMI basis. So what is meant by no cost EMI basis? No extra interest. In simple words, if you bought an AC for 1 lakh rupees and Bajaj Finserv asks you to pay this amount in 10 equal monthly installments, then you need to pay 10,000 each month. That's it. And what about interest portion? No. So that means Bajaj Finserv will get huge losses now. No. No, it will not get any loss. Most profitable company. And if you check its market share, so its market share increased so drastically. Market price is also increasing drastically. Why? Even though it is not getting any income, how it is getting profits? How its market price is increasing day by day? Because it is getting profits. It is getting income. How? How means it will take from seller, and that is 7% of transaction value. That means if you bought any AC on no cost EMI basis for 1 lakh rupees from any store, then that store manager need to pay how much money to Bajaj Finserv? 7%. That is 7,000 rupees. So this is the profit for Bajaj Finserv. No. So definitely seller will provide it for 93,000 only. Because seller is getting customer here. Say for example, I'm a business person and I want some customers. So what I will do? I will make some promotional videos. I can make some advertisement, or I can use some people to refer my products. And the last option, in case of last option, so I am saying to certain people to refer my products. So they will refer the products, and after getting money, I will give some commission to those people. So this is just like commission. How much commission? 7%. So I'm a Bajaj Finserv customer and I want to purchase everything on no cost EMI basis. So there is a large network for Bajaj Finserv because everyone is interested in buying a product for no cost EMI because no one is interested to pay interest. So all want some benefit only. So Bajaj Finserv is bringing some clients to that person. That's why it will charge commission. How much commission? 7% of transaction value. And you will book it as expense. Nothing but commission expense. Selling commission. Wait a minute. I need to complete one more point. That's it. Just one more point. Otherwise, I will take 10 minutes to complete entire OPC concept. Which one is better? Then keep silent. Okay. So it cannot do chartable activities and it cannot do non-banking financial services. And last point is about conversion. Is it possible to convert OPC into other kind of companies? Say for example, OPC to a private company, OPC to a public company, OPC to a Section 8 company? No. All conversions are possible, but last conversion is not possible. So you can't convert OPC into a Section 8 company, but you can convert into a private company or public company at any point of time. There is no time restriction. There is no limits. So at any point of time, if you want to convert your OPC into normal company, yes, you can, provided that normal company must not be a Section 8 company. Okay.